Welcome, welcome, welcome. It is a blood red day in the market. Let's figure out how you're going to make the most of it in the upcoming weeks. I'm joined by my friend Shy here. You want to say hello? Welcome the people and your good
What's up,
graces.
everyone? What's up, everyone?
We got a lot to talk
What
about
a
because
freaking day.
this is brutal. This is brutal. For those of you that follow these markets closely, you know that right now you are not in good shape and it doesn't look good. Question is, will it get better? Which one you want to start with? We got Tesla on the chart, but let's move to the SPY because I think we start general and then dig in from there because I think that's our first move is to figure out what in the hell is going on here.
Oh, for sure.
What do you think of this move today?
Oh, it's for sure start of the SPY because you know what? You know why? We can make some money right now in Power Hour at the SPY because if you pull up their chart, this is the first time since we rallied in the past 6 months, like since November. Yeah, November 3rd was the first time today that we touched the 50-day SMA. Like we're sitting at it right now. And as you can see, there's a slight recovery in the past 5 minutes in SPY's price action. I think it's respecting that 50-day like support line right now. It's the first time we've tested it since this 6 month rally. I do think it's a gut punch we needed today to see like, all right, what's the actual strength in this market rally? If we finish strong today, and again, next week is on the first week of earnings season. I know today we had bank earnings, it was not the best, but next week, in
Right.
my opinion, is like the real beginning of the earnings season. And I do think that's going to be the catalyst we will need to bounce off this. If we bounce off this 50-day, next week's a good catalyst for strength in earnings. If we see a good earnings week, I do think that propels us above that 21-day EMA. That's absolutely necessary for this 6 month trend. But having said that, like we're right now, I did a trade right now on just we're gonna get a power hour bounce, and I really do think we're gonna get that right now. Like you can see, there's some recovery. What about you, Austin? Do you think there's going to be a bloody power hour, or we're going to see some kind of bounce or recovery? Because this is geopolitical. I know it's like there's a couple things that's causing this red day, but I do think the VIX is a perfect indicator of like what's actually driving this dip, and it's geopolitical risk, specifically the tension that Iran and Israel over the weekend. It could get really bad. I think people just want to take their chips off the table before the weekend because they don't want to sit on like their year-to-date gains or even the past 6 months and see it all vanish next week because things we somehow have World War III upon us, and they don't want to like they want to profit take, which is totally valid and fine. And we're seeing the VIX explode to 18. It touched 19 today. It's up 25%. That's not normal. And usually, in my experience, when we see that kind of spike in the VIX and the market red day like this is geopolitical driven, that's a buy opportunity usually, especially if it respects a key technical average like the 50-day that SPY's doing right now.
Yeah, I mean the data tells us right now that the reality is we are still in a technical bull trend, and it's hard to argue with anything other than that. Question is where's the best opportunity to make money? Is it going to be small, maybe small segment of independent leaders that push up from here? Do you think that? Well, I guess if I'm picking up what you're putting down, we got an opportunity for upside on SPY here.
So if you want to get real micro, I think small cap time is done right now. I don't think they had a couple head fakes. They did not break above 210 like we wanted. Like they've just had so many fake breakouts. And if this morning's bank earnings is any indicator of like what the regional banks will do next week, it's going to be a no bueno for IWM because KRE is a perfect index to track for the regional financial banks. And that's been like struggling in their chart. And it's a 30, I think it's like weighted 30% of the IWM is regional banks. So if they don't do a good job, I really do think it's going to be bad times for IWM. And naturally, there's going to be a rotation from small caps IWM fail breakout to the big tech names like the Microsofts, the Metas, the Amazons, the Googles. Like all these names have hit all-time highs this past week because they're a safe haven for people because they're printing cash, doesn't matter the interest rates. They are the leaders of the secular growth thematics for AI, quantum computing, you name it. Like they're the leaders of it. So like it's a great place to park your cash until the noise clears up. and you're also benefiting from the growth on their upcoming earnings or the growth thematics that are in, like, which is AWS, like Azure. You also got the OpenAI, like they're exposed to all that, and they're just printing cash. And I personally think that interest rates it's do or die in July for interest rates. I don't think September and November is in play at all. It's way too close to the election. There's just too much political noise around, like any kind of there's no way the first interest right any kind of rate decrease cannot happen around the election. There's too much drama around that, in my opinion. So it's
Right.
July or bust. If it doesn't happen in July, we might not even get it this year. And don't be in small caps if you are in the same camp as me, because they're the most vulnerable to interest rates. And it just went from expecting 7 cuts in January to now 1 or 2. And the market, if you see the IWM, like it hasn't dipped as much as you would think. If you told me in December that we're actually going to get 1 or 2 and expectations were 7, I would think, all right, IWM is probably at 160, 170. That's not the case. It just broke 200, but like it's still not as severe as you thought. So I do think there's severe headwinds for small caps. It's not the same case for big tech. So I would hide there. And I do think Netflix is the next first Mag 7 name or big tech name to reports next week. But we're also going to get ASML and TSM, which is, if you guys know, semiconductors, like those are the kings. And then like the app, like if you create a chip, you need to use those 2 companies. So that's a great precursor of what potential benefits AI will have this upcoming earnings season. So like we're gonna get a lot of hints next week, but I do think like we're breaking down right now. Actually, I'm looking at the SPY right now. We're clearly breaking that 50-day. So you gotta watch out for these levels, but I don't think it's the end of the world. What do you think, Oz?
Yeah, I mean, so earlier in the week on that stream I do every Monday at 5 Eastern, right? We broke this down to understand, okay, where can I trade? Where can I take the trade and make money? Like, I guess from an intraday perspective. And basically the trade was this. We already have all these levels mapped out. I don't know what you know about that, but I like to use a very simple, like range bound strategy. I think SPY is of the most predictable assets to trade. So let's take what we know, take the data we know. All these lines were on the chart before any of this materialized based on what's happened so far. This was our key break below 515. We were either going to go puts if we hit 521, or we were going to break below 518 and a third, and we were going to take the 515 puts. Those ran about 300% today. As you can see, our secondary target was 507.90. So we're trading just above that right now. That's about where I think the SPY is going to move. Now, here's the real issue when we go back in time a little bit here, and I'm going to get rid of this. Well, I guess it's relevant to leave up. So we basically mapped out that the SPY likes to move about 1.8% over basically 2.5 days, 2.5 to 3 days. We got pretty much that entirety of that move in 1 day. So troublesome, worrisome, yes, absolutely. But the silver lining is we've rebounded from here in the past. If you go back to the March 15th of this year, right? We found trend support and then we moved higher. Question is, we were also following broader. If we look at this as a whole, let me get rid of this indicator. We're following broader trend support, which has now been removed. We've been following that since February, and it's basically we've violated it, and it's done now. So now we're just cascading lower. So the question is do we build a range, 507 to 515, accumulate, redistribute, and then build position from there? Or is this kind of the beginning of a broader issue and of a journey back to $500? That to me is like what I think that we really have to look at. You can see my note here that this is the bullish support that must hold. We need to stay north of 521 to see more upside. Since we didn't, obviously the trade to 515 paid off again. That's up about 400% today. If you took the entry at the position that I noted from the stream, you have a huge opportunity for that upside. I mean, again, this thing moved about 1.5% in 1 day versus we were typically seeing that over 2 or 3 days. So I think that increase in volatility really tells you. I was pulling up the VIX as you were talking before I flipped back, and you could see that it's very, very interesting to look at. Today was a big move in the VIX. Let's go to the daily just to see it as one move. Big move.
I made a trade on the VIX today.
You did. How'd
in
that
which
go?
everyone else could. Like It's a ticker is SVIX. When it was up a touch 19, I bought that ticker to capitalize on like they're gonna go. I think volatility is gonna kind of like go down towards the mean, which is like 15. I think I don't know, anytime it's news driven and we see that kind of spike in the VIX, 99% of the time you can profit by doing the SVIX. Like it's just a temporary geopolitical
Is that
news
an
driven risk.
inverse?
It's an inverse. So it's a leverage tool. Definitely don't hold it for more than a couple of days. I'm just holding it through next week. I think listen, like Austin and I talked about this last Friday. Like you guys were here. Like we said April 4th, which was the Thursday, like that NFP, that was a lower high, and the market mechanics felt character changing than what's been the past 6 months, where we had a red day and we usually recovered and we went higher high. And it was like, what red day? Business as usual. We started getting crumbles of hints that like, oh, new behavior in the market the past week. Like this is new behavior. Let's monitor it. Let's see how it recovers. You can clearly see like ever since that NFP red candle day on April 4th, like that was the tell. That was the first sign near term near term tied down. This is new behavior. We need to factor in additional noise because there's perma bears I talk to all the time, perma bulls I talk to all the time, and they were just like multiple of them is like this new information is troublesome, and they have not said that for like months and months. Anytime we got a hot print, anytime we got some kind of like markets like doing really well, we're not gonna get a rate cut. They were like, no, business as usual. But now it's like we broke the 21-day EMA for the SPY. That was a really hot CPI print. Like we actually have to be watch out for reacceleration and inflation. And now combined with the geopolitical risk, like World War III, like I know it's absurd to say, but like, dude, if things are carrying momentum like it's been this week, like that's something I really hope we don't have to factor in. But like, who knows? Like just that additional noise is not what the market needed after it had a technical breakdown and after just like a really hot inflation number. Like it's a perfect storm right now. And we called it last Friday. Like Austin, remember we talked about, it's like there could be a retest in the 50-day. And I said
Absolutely.
the VWAP, which is my favorite tool to use, VWAP, from that October rally. You can create an anchored VWAP from October 7th. You can see 480.
Do you want to show that on your chart? Go ahead and show it. Here,
Yeah,
let me back out. You can pop in there. So I think they need to see that. I mean, it's spot on.
Present. All right. Let me know if you can't see it, but we called it. So right here, we said, all right, that's the NFP. Like that was an awful daily red candle. You can look at this candle right here. That doesn't get uglier than that. That's just constant selling throughout the day. And just that's not a good candle at all. And we even commented like bonds and gold are kind of flashing red like that's a bad sign, like what they were acting like that day. And like that's something to know. And clearly that was another first sign of a precursor of this turn. But it was like, all right, that's a really bad day. We broke that 21-day EMA because look at this purple line. Clearly, this is when we bottomed over here and we rallied over here. You can see we let me clear out everything else. We respected this purple line like a champ during this whole 6-month trend. Like literally you can make bank if all you did, like all the noise in the market, all the news, all the FUD, all the media, if you just focus on the 21-day EMA for SPY, every time it touched it, you just got bullish. You made bank right here. Bounce, boom, tested, bounce, boom. Same thing. It's clearly respected. Disgusting candle on last week. It broke it. I was like, all right. Well, today we recovered above it. However, it was a lower high. Clearly, you can see it was a lower high. So I was like, all right, well, we recovered the 21-day EMA, but it's not a good technical bounce like it's been before. So let's see how we do the following week. All right, it was fine. Like we had a gap up on Monday, if you guys remember, but it was a slow fade. And then this is not a great candle either. And we had a great day on Thursday. However, today was, I think, the camel that broke this broke the camel's back. Like I really do think We broke this 21-day EMA trend right here clearly with volume and with like the VIX exploding. We broke it. So this is new character behavior the past 6 months. Don't use a historical 6-month bull market trend as any kind of indicator anymore. We're in a new territory. That's how the market works. You can't say, oh, it happened past 6 months, it will bounce. No, that new chapter. It's a brand new chapter. We broke this 21-day EMA. So now we have to take in all the information, brand new, and make new decisions. So now we broke that 21-day EMA. What's the next one? 50-day. Look at that. Ever since we rallied, we didn't even close to getting touching it at all. So this is the first real test on, okay, so 21-day EMA, clearly you broke. Will we survive this? It looks like, as you can see, like we're bouncing a little now. Like I said in the beginning of the call, I was like, this is the point where we're going to bounce, I think, in the power hour. We're going to have a good, strong finish. Looks like we're getting that. We need to hold this. And if we do, I do think that we're going to have next week's Catalyst earnings will propel this above 515, business as usual. However, if next week's Catalyst is similar to today's bank earnings, which was a no bueno for the market at all, there's so much room for the 200-day. Like this is, if I couldn't jump off a cliff because this is too big of a height. Like I'm scared of heights. That's how big of a gap there is between the 50-day and 200-day. Yeah. So I rather use the VWAP, which is my favorite tool, like I mentioned earlier, where it's just average volume and price that a normal person would pay during this timeline. So when the rally started, this is the average amount that the volume and price that people are paying. Amazing indicator. One of my favorites. So if you just use that, this is where I think we're going to land, 480. I really do think 480, if we don't have good, strong earnings next 2 weeks for the catalyst to propel it higher, we're going to touch this 480. And if we don't touch that, if we break that 480, you can clearly see the volume shelf is significant in the 470s. Like I really don't see us breaking 470 at all. Like especially in an election year, like we won't break 470. I do think we test 480, and I really do think we bounce there. If not, worst case scenario 470. But if you zoom out, it's not even a big deal. Like if you hit the 480 right here, guess what? It's not that big of a deal. Zoom out. Just keep zooming out. That catastrophic level I just mentioned of fine, it might dip, and this is the worst case scenario. After all this, this is just 1 year. I'm talking right here. That just shows, come on, guys. We're just gotten way too spoiled the past 6 months, even the past year. This is healthy if it touches this and just recovers. I don't know. What do you think about that, Oz?
Well, I had a question for you, not to keep putting it on you, but someone asked, what do you think of gold right now? What I find interesting, and I'd love to hear your thoughts on, is what do you see as the correlation between, like, we're hitting a point in the market in which fear is rampant, right? But gold has been crushing. However, today, if you pull up, like, for example, Dust, the Direction Gold Miners, the 2x leveraged bear gold ETF, why are we seeing so much buying today?
Commodities, it's too late. Do not participate. It had its time in the sun. I think the time to do it was the beginning of this year. Don't get suckered into silver. Don't get suckered into gold. I think it's too late. You're going to be holding a bag if you start getting into commodities right now. I think it's had its move. I really don't think oil is going to hit 100. If it does, fine. But like the money that you could have made, it's already been made. Don't get sucked into this. Like I'm telling you, just like it's a sucker's play. It will not continue going higher. It feels already too juiced. In a similar fashion where the VIX is like exploding today in 1 day, don't buy options to protect your holdings because those contracts are super expensive. They're levered up already on volatility expectations. So like, don't get suckered in. Again, this game is meant to make retail investors into suckers and losers. Don't fall into that category. Don't get into the commodity space of silver and gold, or like try to hedge your portfolio right now because it's just too late. Like volatility exploded. Commodities made an insane move the past couple months. Money's been made. The best thing you could do if you're actually like worried and like you want to sleep better at night and you don't want this to affect your relationship, job, etc., take some cash, trim some position, raise that cash position until the noise clears. Because I can promise you this: the noise will clear. Like you just saw the market's meant to go up in time. Like yes, there's gonna be massive swings. There's gonna be a bear market. There's gonna be corrections. Yes, but if you hold long enough, you will make money at the end of it if you pick the right stocks and you control your risk tolerance. Because if you
So
don't, like that's when people spiral, and that's when if you don't have a plan, that's why Austin and I are like, we love doing this stuff because we have a plan individually. Like we know ourselves so well in this investing landscape, and we have a plan already. And that's why on a bloody 2% day, him and I are smiling, talking like it's a normal environment because we're so confident in our plan, and like we're not going to spiral and we're not going to be fearful. We're going to read FUD and giggle because like, yeah, sure. That's a good clickbait and good headline, but like we already know what we're gonna do, so that's not gonna dictate our behavior at all.
no, and so the question I have here is Nvidia from here. Looking at this chart, I'm not going to lie to you. This strength to me is it's impressive. I think it's
So
impressive.
I do think Nvidia is benefiting from the tax on Intel and AMD, specifically in China, where first off, Intel, perfect example, and I mentioned it I think a couple months ago or like a month or two. It's like above 50, don't get in. You made your money. I think it has too much headwinds going forward. Yes, they might join the race with AMD and Nvidia, but like years to come, like there's gonna be no profitability in the next couple of years for them. And like, why waste your head opportunity cost? Like, why waste your capital on just like holding that position of a potential falling knife? And just like, I think it'll balance. It's undervalued. The money's been made. It reverted back from the 50s to what, $38 right now. Last time I checked, there's so much opportunity in the semiconductor ecosystem. Don't waste your time on Intel. Focus on the king, Nvidia. And I do think Nvidia, looking at their chart, look at that. They're protecting their 21-day EMA like a freaking champ. Absolute champ. Here, I can share my chart again.
Yeah, go for it.
So Nvidia is, first off, like one of my favorite sell side
Hey, pop your chart up there.
Yeah. One of my favorite sell side shops is Ray J, if you guys know that, Raymond James. And they had a really great note on Nvidia this week where let me share my screens before. Where I think they mentioned like this, everyone who's saying this AI is in a bubble in the late stages is delusional. And this is just the beginning, and Nvidia is going to prove it again this upcoming earnings season. And I fully think that as well. Where the first tell we can have is like, if you want to track to see if this like the music is going to keep playing and you should keep dancing, is follow the capex for the big tech players. That's going to be a good indicator. Same with the ASML earnings and TSM earnings next week. Great precursors of, will this party continue for Nvidia? I'm a part of the camp. I think Austin is as well. Yes, it's going to. I think its days under 1,000 is numbered. However, if you don't believe us and our instincts, because there's no facts yet, because earnings season just started, look how they're the strength they're showing today. SMH is down 2.9%, and their chart's actually not looking too great. So you can see right here, it's just like lower highs, and they're breaking the 21-day EMA. But if you look at Nvidia right here, their hold, like the 881 is at where it's at right now. Their 21 days at 879. They're protecting it on a bloody day where AMD's down 4%, Intel's down. I don't even have them on my market watch list because they're not ready to be on my market watch list. But anyway, so they're just like, they're showing some red today, but they're protecting the 21-day EMA, which is absolutely vital for this rally. Like you can see over here again, ever since this rally started, which was this year, like, yeah, they started in November, but like the real rally was freaking 2024 of just like $1 trillion company going up this much within 3 months is never heard of it. It's unreal. You can see they protected the 21-day again, like this big red day, boom, bounce. This is when it got tricky. I was like, remember the NFP Ugly Thursday? And we went, Austin and I did this call in last Friday. I was like, all right, well, they got rejected on the 21-day over here, is much lower high. This could be a reversion of testing the 50-day. Nope. They've been hovering it. They didn't even touch their 50-day. Beautiful day yesterday. And today they're protecting it. So it's telling you like, it's not ready. It's not ready to do that dip that everyone's been wanting because a lot of people missed out on this Nvidia run. I sold out too early. I sold in the 300 to 400s because I didn't know what I was selling at the time. I was learning about the semiconductor industry. It's the cyclical nature of a company like Nvidia put me off a bit, and I'd rather focus on the late stage, like other companies that don't have that issue. Missed it. However, I do trade all the time. Like I'm trading it right now at a protected 21-day EMA, and I do think if there is going to be a recovery, like the market next week's a catalyst for earnings to propel it higher, Nvidia will be the leader for that. So the key indicator right here is they're protecting the 21-day EMA. If you look at their 824 is their 50-day. But again, my favorite tool is the VWAP. Let's see what the VWAP says from this clear break. Look at this candle right here. On January 8th, that was a gorgeous candle. I'm going to do an acred VWAP from right there to see, all right, what's the average price that people paid during that time frame of that clear breakout on January 8th. Look at that. 760. Not so these are the tools. These are the price action I would monitor. 824 and 766. I would go long in my long growth portfolio if it touches 766. Because I truly believe that we're this insane like party that NVIDIA is doing on the first stage of this AI revolution for the hardware space. I think it still has 1 or 2 more years left and squeezing that juice of the earnings growth. So if I believe that, I'm going to take this little, I guess it's like 25% dip from the all-time high at this level. And after an insane run, like people are like probably scared off from that. I'm not, because I know when winners like NVIDIA, they're going to keep winning. They're not going to give us the opportunity of going down 50%. That will never,
right. And
ever
look at that
happen.
strength, man. Look at that strength coming out of the last
insane.
2-3 days. It's the volume isn't there to say this is going to be overwhelming. Kind of you, hey, we're not a fluke. Now, I don't think NVIDIA is justified. I mean, but that's it's like you can't look at this through the lens of what has been for the last years. We are living in a different world in which valuation and market economics are just two totally different concepts in some cases. So it's like, who cares at this point? Everything is a meme stock because it's a meme market. But also, I would say that something that I don't feel is talked about enough: consumer demand vis-a-vis retail investment has never been, I would argue, like an important factor in these kind of decisions that people make as far as what to invest in. I mean, marketing is more important than ever, and marketing in a very broad sense of like, what do retail shareholders of NVIDIA talk about? Their position in NVIDIA, which is doing what? Enticing other people that aren't shareholders to become shareholders, to be part of the club, despite their belief in the fundamentals of the economics of the business or the chart. It doesn't matter anymore as much as it did once. So I think that that's something that is difficult to price in, and it's more of like, I think it's more sentiment by feel, which is like a non-real thing. It's like the vibe, if you will, which is nonsense, but you can't discount it anymore. It's been discounted because it wasn't a thing. Now when retail traffic makes up a large proportion of the market, a lot of their buying and selling does, as much as like we understand, okay, algorithmic trading is just crushing us day in, day out. Most trading is done by computers that are thinking a billion times faster than we ever will. However, they are also still going to, I don't see a world in which they are completely independent of human decision making, because their incentive is maximize return on investment, not buy good names that are going to hold up through time. No. It's high frequency transaction. Let's maximize profit. Let's minimize risk. And let's also minimize time threshold to reach that profit. Like they want maximum profit, minimum amount of time. So how do we achieve that? We follow retail consumer trends. Keyword follow. So we, in effect, I think, in purely speculative, front run a lot of these decisions that these computers are making, because if they can basically come up with their algorithm that says, hey, we see still a suspicious amount of retail buying on NVIDIA, like we don't think we're gonna have the power to drive this lower, then let's drive it higher, and then we'll drive it lower. Let's make money up so that we can make money. We can make more money down.
100%, dude. I could not agree more.
So,
by the way,
when you look at
That's
things like
that's the
Nvidia,
close
like
we.
I'm very interested in some like June, July 950s. I'm interested. I'm game. I'm down.
Oh, for
I
sure.
swiped because of the strength we saw today. I think it's worth considering. And I would agree with you on the SPY too. I think a little different in that you got to weigh in a lot more than just Nvidia because it's more like, okay, let's take a peek at Apple. How did Apple fare today? Let's look at SPY's master, supposedly, or has been.
Oh my God! Look at these back-to-back daily candles. Look at that gorgeous candle yesterday and follow today. Oh, look at that! Did it finish above their 50-day? Oh, they
No,
just
I think
missed.
just
Damn, I
below.
really wish it did. So, Apple. Listen, last 2 days was great action for Apple. I really wish it finished above this. Not the end of
I
the world, but
discount, throw today
continue.
out. You don't get that kind of strength. That's not a
That's
whimper.
true.
You know what I mean? Like a whimper would be 2 or 3 days of like marginal action to the upside. The volume's low. Like that's a whimper, and then a hammer, swift, sit down, boy type move. To me, it's like, hey, look, we didn't have the gumption to push it over the line today, but we're making the effort.
They survived another day. That's all they
That's
had
a
to do.
chart you
That's what
can't
they did.
discount. I mean, they survived a
Yeah.
brutal day. Green.
No, it's massive. And listen, Apple might be ready. I had this argument with someone like yesterday or 2 days ago. Like, yeah, they are just been dinosaurs on the innovation front, but at the end of the day, like there's no stickier product in our lives than Apple. Like literally, they're in our
Yeah,
ecosystem. Like we can't live without the Mac. We can't live without iPhone. Like I can promise you, they're gonna have a space in this AI race in the next couple of years. And
100%.
the way that Apple works, we don't know what they're working on until literally right before they launch it, because they have that luxury of like they don't need to do the hyping or the
Yeah,
selling.
we
Like
don't need any of
Tim
that.
Cook, they don't. Yeah, Tim Cook could just like execute and like let his team like do his thing without doing like the hype up that a lot of the other names like Zuck has to hype up his shit all the time just because I love Meta as a company, but like I do think Zuck has a little salesman in him that he's been doing recently. Regardless, Apple's gonna have to have an credible AI hardware component sometime next year or two. Like I think they're gonna revolutionize Siri. Very easy win for them, and it's gonna be in everyone's phone. And then
Who was locked
on
and
top of
loaded
that,
for this AI revolution? Of all people, Apple.
100
They were already locked
100%.
and loaded. Because, dude, I think that the adoption dynamic there's not as much friction as I think some people may have thought there would be. But usage and application in everyday life, that's where I like, how do I really, like, even myself, right? Like I understand what AI can do and how I can use it, but it is not integrated as system and process and function as I would like it to be and probably should be, right? But Siri is. When my wife can't find her phone, what does she say? Hey Siri, play me a song. So it's
Yeah,
not
and
about
now
that function being a function of AI. It's that she's been trained to use Siri in a useful manner. So now if Siri has
yeah,
AI
imagine.
functionality, it's just, oh, I already know Siri. I love Siri. I use Siri. Now Siri can just do more for me. So adoption is just like bang rather than a slow trickle. Like they're already peaking the bell
Yeah,
curve. They've already done it. And I feel like no one's even said that out loud. So it's like we need a show on CNBC. This is bullshit. I'll be at the exchange next week. I'm going to make that argument. Why are we talking about this and you're not?
I mean, yeah, they're gonna build some LLM into Siri, and it's gonna be so easy for everyone to use. Like, again, your wife, like, is a perfect example. But again, Apple's whole thing is building an ecosystem around some kind of hardware, and that's where they make the real juice and earnings growth. And they're gonna do that in AI. It's inevitable. So I don't think Apple should be discounted. But like,
Did you see
I
their
want to
news
call out like
today? So
what you
CFRA
mean.
research analyst Angela Zeno reiterated his buy on the Apple stock following the Bloomberg report relating to something that happened at that artificial intelligence worldwide developers conference, blah, blah, blah. But I guess there was some sort of moving news. The tag, I'll just read you the tagline. So the tagline says Apple stock rises on AI Mac news. It doesn't really give you a lot of color around it, but Bloomberg's been talking, when they start chattering about it. Company working on rapid transition to new processors. The revamp will bring AI capabilities and memory component upgrades. So I would say Apple stepped up on processing power. Like the Mac competes pound for pound with some of the best gaming laptops at this point. So I think that was a big limiting factor for them in terms of the integration of AI into what they do. But again, like as much like I don't use an iPhone, full disclosure, but surprise, surprise, I have a MacBook. I won't buy a laptop from anybody else. My first one lasted 7 years, 8 years, right? Full functionality. Second one lasted maybe 4 or 5. And I think that like when you look at what they did with the touch bar, like even something so simple like that, but it's like more of an interface than anything else, people ate that shit up just so they could slide their little finger on the thing. So it's like I think you got to also just it's worth mentioning that Apple audience, as you said, is built. Apple has done a great job of training you how to use Apple as a brand and an ecosystem to live in. So to think that they're not going to be able to vary in a fast-paced manner, get people like my wife, who's like 35-year-old woman, who's very good demographic. I look at Starbucks and Apple is like their best friends. That audience is just that. It's delightful that like 30 to 45 millennial woman ish. I don't know if that touches in Gen X, predominantly white. They are like their core demographic. So I think if they can push adoption of those things in that audience, they drive almost all consumer behavior, in my opinion.
First off, that's just too young. Like you're not even talking about the boomers. Like boomers are obsessed with Siri, love Siri. Yeah. They won't switch any. They won't
Siri, find my email.
Exactly. Like
Siri, what's my son's number?
Yeah.
Like shit, like, Siri can't even answer you because the prompt was terrible.
100%. And I can tell you, boomers are a little cautious on using ChatGPT. Like it's over their head. But if they can voice it through their phone, boom. Who knows? Like that's the next level for them.
Now this is it.
So I do think Apple needs more respect. However, my issue with Apple is why I don't own it. I'm 30 years old. Opportunity cost. Like I rather find those hidden gems that are small mid cap. That's the end of the day. That's why I don't own it.
In a 2009 market where it makes sense. Or at 19. I was just talking to my dad about that. He was just like, I was like, you son of a bitch. Like, what's your cost basis? And he just laughed at me. He wouldn't even tell me. He just laughed at me because my dad's like maybe 70 now. He's just laughing at me. That opportunity, goodbye. It's not going to happen. It's not like it's just never going to be. So, but one question I did have before we move on to Tesla, because I do want to talk about that one. Do you think Apple is also better positioned because you have to imagine they have a warehouse of data from those Siri voice requests trained? Because that's the biggest issue with the LLMs, right? It's like, how do we train it? Well, who has the data to do so?
I don't know if they can access the data. I think they're handcuffed.
Really?
Handcuffed.
Well,
I think they do. Wink, wink.
You know, Zuck's got that data.
I know they'll never vocally or officially say like, yeah, we have the biggest source of firsthand data in the whole world, but they really do. So you're right. Absolutely. Like it's stupid. It's stupid to not think Apple won't be a top 3 or top 4 biggest like companies forever. They have just such a first mover advantage. And like people are calling Apple the next Cisco. That Cisco explosion in 2000 from hardware. Like Apple hasn't innovated. They're going to be the next Cisco. Like Apple has enough cash to buy out multiple GDPs in Europe.
Yeah.
Like they have a stupid amount of cash. They can do whatever they want with it. I do think they were half glass empty view. Like they just stopped innovating because they're conquering for such a long time. Business is good, amazing. Like why disrupt anything regarding that? And I don't love the R&D expense on the car. And I think they're going to humanoids now. Like, sure, if you want to do that stuff, but
yeah, but do you consider scale of innovation? Because like, look at what they did when they moved into effectively becoming a payment processor. That is an entirely different business, right? We're a phone company. Well, we're a technology company, right? But focus on the phone and the computer hardware components. I think that wasn't like that wasn't a sidestep. That was like the Neil Armstrong. This is a leap for man. Like to do that with the amount of time, like that's a massive organization to be able to then efficiently scale that segment of the business without disrupting its core business. To me, that's like the holy shit kind of moment. I think that's more in like to me, from a just business to business, I think that's almost the most innovative thing about them. Is like, holy shit, they just squeezed in and strangled all these developers and said, I'm taking a third now. You need me. And no one could say shit about it. Fortnite was like the only example of anyone who finally bucked the master and won.
True.
But
I
do you use
also,
Apple Pay?
yeah, of course. Oh my God. Apple Cash is clutch.
So that's what I'm saying. It's like, I think anyone discounting their ability to just Goliath into an entirely new segment that's slightly related to what they do will be remiss.
For sure.
That will be dumb.
Yeah, 100%.
All right. Now Tesla. Now, if we're talking opportunities in our generation for 5 to 10x, would you say that Tesla is one of those opportunities?
I have, first off, entering this year, I had Tesla probably a 2% position for me. I'm like, I didn't think they were ready yet at that inflection point of being an AI and software name. Like, that's my whole thesis. It was like, that's not an EV company, AI and software. When's that inflection point? We have that inflection point. I'm telling you guys right now, it's that inflection point. I have been buying like a madman Tesla stock in the 160s, 170s. I think it's a 10% position for me, top 3. You guys have the FSD technology. Like, yes, we might not get there like this year, but if you look at the news on the FSD miles from just a quarter ago, it was like 500 million. They just released the numbers this freaking week. It hit 1 billion. That just shows for years and years that 500 million mark, it took forever for them to get. And just 3 months, they doubled it. That's an inflection point. And management has said that they need to get to like 5 or 6 billion FSD miles for them to like hit that benchmark they need to feel confident for that wide scale. At this rate, especially the free trial, I fully think that FSD free trial will be much stickier than anticipated. I do think they're going to cut the cost from $200 a month to $100 a month, like 99 specifically. I do think that's going to be much more digestible. And like once you use FSD, like you're not going to go away from it. Like women are going to do, I've heard evidence that women do makeup now on the way to traffic to work because of FSD. Men, I'm not going to genderfy people, but I guess everyone, like you can do whatever you want in traffic. Like I can like just eat. I can just like relax. I don't have to get road rage from like I live in LA. Like I live in freaking heart of Beverly Hills in Hollywood, nonstop traffic on Melrose. FSD, fine. Yeah. I'm leisurely taking my time. R&R. Like it's so much stickier than people anticipate. And I do think that inflection of 5 to 6 billion FSD miles, we're going to get that this year potentially at this scale. And if that happens, I think we might hit it earlier because Elon, if you guys don't know, 8.8, know those numbers. That's going to be the whole launch of the new next gen platform for robo-taxis, for the FSD. Like this, Elon announced it. Like amazing salesman. I love, like, that's why having Elon as a CEO for one of your companies is incredible because all the issues with Tesla right now isn't company specific. No, it's not because they're losing market share. No, it's because there's competitors in China. No, it's because the whole EV industry is getting destroyed the past year or two, like absolutely murdered. Like it's just not Tesla's fault at all. And knowing that, like it's going to recover inevitably. Like Tesla will be, not Tesla, EV market will, everyone's going to be driving EVs by 2030. Like it's inevitable, in my opinion. So it's going to head back there eventually. But in the meantime, until it recovers, here's this little shiny thing of 8.8. We're going to put a bottom on the stock price. We're not going to let it keep going to 140s, 150s. We're going to put a bottom in right now and like the 160 area and like have people fixate on that 8.8 date because we're going to launch something revolutionary for the next gen platform. I really do think if they weren't so confident about the FSD technology or the robo taxis, like they wouldn't put a date like 8.8. Like he won't embarrass himself by just like completely missing the radar. Like it's gonna be a revolutionary event. And I think it's gonna catch a lot of people off guard. And I like to be a first mover before something happens. Like I really, really do like that. I'd rather be first than like miss a 15-20% run than follow up. Like I'd rather be front run it. That's what I'm doing with Tesla because I know it's going to be an AI software play. And once FSD becomes sticky and actual revenue driver for them, It's an 80% gross margin software element
They don't
of
need
this
to be an
company.
automaker anymore.
They don't. It's literally going to be the AWS to Amazon is going to be FSD to Tesla. Like they're going to just pure earnings where they can invest in the infrastructure in Mexico, invest in more infrastructures around the world where there's going to be a mass producer of car, like their manufacturer if they want. They don't have to worry about like capital anymore because they're printing cash from the FSD technology. And then it's going to also provide the humanoids or AI, whatnot. Like it's going to be so many different growth avenues. And that's what FSD is going to allow them and finally change the narrative of they're worth so much more than other EVs. Doesn't make sense. All the other OEMs are worth like less than Tesla. No, it doesn't freaking matter. Like it's just an AI software play. And sure, keep spraying that FUD because you're allowing me to juice up my position in the 160s, knowing they're going to be competing with Microsoft and Apple by the end of this decade for who's going to be the most valuable company. I'm like really confident in that. And at $500 million, the run rate for that growth in the next like 5-7 years, it is juicy. So sure.
Agreed. So let's move this great question. So Mr. Darrow Andromedas says, if you want to talk about data, then you'd argue that Mobileye has a way bigger advantage. That's
No,
Tigger
Mobileye
MBL.
is limited. Let me figure out my notes. There's I think there's certain things that Mobileye is really good in the micro specific of their technology. I don't think they can scale it as much. I'm looking through my notes on the because I wrote the ADAS and AV space on what the difference is because I do like Mobileye's fundamentals. I hate that Intel owns 90% of their company. I think that's a massive, massive headwind that nobody's really talking about as much because Intel's struggling. Like they need to get capital to like do the manufacturing in Arizona and like the grants are getting failed by the government. Like they need for them to pivot. It's a huge capex expense.
Why Tesla
Guess
built
what they're
a
going to
car
do to
company first so that they could actually just collect their own data, test in their own basically space.
Exactly.
So like one thing that I think is I would love to hear because this is your deal, man. You've lived into this little world for a while. I know you've researched every little angle. Crowdsourcing. Does it fit in? Do you think Tesla can implement? I mean, why wouldn't they? Because isn't that one of the core arguments is that, Mobileye wants to crowdsource their mapping?
I do think it can. I think there's bigger issues for them. That's like one of those things where you don't tackle it right now because it's such a small rock to deal with. I think eventually Tesla will be able to.
Is it right? It's a sensor tech. Like, isn't that really the value? Because like maps data, Google can give that to you. That's not an issue. But the sensor technology is where I think whoever comes out ahead there, like that's the real hardware win.
But no way Mobileye is going to come up with that though. Beating Tesla. That's the thing. Like listen, Mobileye has they have a space within this like AV and ADAS space, but they're nowhere close to a full scope of autonomy driving like Tesla. Like I'm annoyed I can't find my notes on it, but like I deep dove into Mobileye because like I'll pull up their fundamentals. Like Mobileye is really cheap right now, in my opinion. I do think they're really cheap. I modeled out like what their price target should be by 2026, and I put them at $50. Like they should belong in $50 in a year or two. My issue with Mobileye is
last year wasn't that a big element? They cut that forward guidance in August.
They're supposed to have negative 9% revenue growth this year. So what the fuck? Yes, I get the EV industry. Perfect example is struggling, but like, come on, -9, that's bad. But they have free cash. They have 20% free cash flow margin. That's their normal. Like I was like, all right, that's very impressive. And their top line growth will stabilize once the EV industry recovers. So my favorite metric is Rule 40 score. Combine the revenue growth and free cash flow margin combined will get you the Rule 40 score. Mobileye, I do think will be 40 or higher. However, their tech is limited in my opinion. And like I mentioned, Intel is a 90+% shareholder in Mobileye. And like I said, like everything that Intel needs to do in the next 3 to 5 years is heavy CapEx. What are they going to do to raise capital to fund that? Sure, government grants. They're going to sell Mobileye shares. Like it's inevitable. Like they need to like sell off some of their shares in order to fund this Intel, like this,
right?
All their corporate strategies. Like that's a headwind. There's going to be constant selling pressure for who knows how long in Mobileye that there is a ceiling on that stock. price. Doesn't matter what the fundamentals are. There's investors out there like me who will not touch it due to the red flag of Intel owning 90%. Like I'm not
Yeah.
touching it.
Have you seen, that was my favorite. I remember when that came out, I think it was like right after that guidance on earnings or right before Loop Capital. They're like, oh, this should be in the same conversation as Nvidia and Tesla. And I was just like, dude, like I get it, value, sure, there's something there, but like, come on, man. Come on.
I mean, Jesus. That's pretty bad. I mean, listen, let's look at their stuff. Let's look at their market. Let's look at their chart. Because I do think Mobileye has an interest. If I'm wrong in their tech, this can run. And if the head of Intel doesn't want to sell their shares to fund their capex, fine. I don't see. I've worked in corporate strategy for 8 years. I don't see how they do that. But okay, I'm wrong. If you look at it right here,
they're also nailing pretty much all their price targets according to the big boys. At least like Morgan Stanley, UBS, we're already there. I think they're all priced in 30 to 40.
First off, they've recovered it quite a bit, 50%. So that's nice to see. So clearly, let's see. First off, this candle's disgusting right here, over here. So I'm just gonna do this. Whoops. Okay, so let's see their 50-day. Looking at their charts, actually, let's go off this is the disgusting gap down. Actually, let's go over here. Let's go to this one right here. Wow. Technically speaking, this could break out right here. Look at this.
Yeah.
Look at that. This is thin air, absolute thin air. Holy camole.
Yeah, it's a gap-filled dream.
So this could be an interesting $40 call September. Fine. I could see that argument, but the argument for I'm a long-term, I know I'm talking a lot of TA right now, technical analysis, but like that to be a full round investor, you need to have fundamentals and technicals. Fundamentals teaches you what to buy. Technicals teaches you when to buy it. That's the biggest deal. And if you have those skills, you're a full investor. So it's really important to have both skills. However, like 75% of my philosophy is long-term fundamentals. So I don't justify putting Mobileye into my portfolio until A, they prove their tech is not limited as much as I think it is. B, Intel literally vocally says we're not going to divest any of our shares into Mobileye, and like we believe in them long term. That's the change in that belief. And also, I want to see how they recover from this EV industry like depression. It's a depression in the EV industry. But technically speaking, this is going to freaking fly.
Dude, room to 60 easy. Like if it's north of 45, this could go to 60 because that's price discovery, right? Like there is, I guess, in literal terms, no cap on where it could go. But let's be realistic. You always want to extrapolate out. Fibonacci is king, right? Like you always want to extrapolate out in the same lengths that it contracts. And I would say that like seeing a retracement from here to 40, 45 makes sense. Seeing 60 isn't crazy either. But beyond that, I mean, the upside's there. It's just going to be very difficult. You're talking this running to $8,500. But from a technical perspective, like there's nearly no volume shelf. So they go north of 48, right? It's kind of gone. I mean, especially riding on good news, forward guidance or earnings, like it could definitely go, but you're still looking at max upside, 100% upside from here in the short and medium term, which isn't crazy. I mean, it's great. It's a great return, but it's not insane. You know what I mean?
I'd sign off on that trade. I do. I would. But again, interest rates staying higher for longer. Mobileye is affected by that. They're not going to really fly as much. So
yeah. So one more to take a little peek at, just be mindful of the time here, is where do you think we're at with Palantir? I mean, I know you love it. You know I love it. I'm a big buyer, 760s, 780s, buying up to like $8 or $9. I'm still holding the full position. I think from a technical perspective, we got a nice shelf, 21 3/4. We got room to 27 again. We need to see north of 27 before we really see anything more happening. But fundamental-wise, I mean, cash giant. I mean, they've done very fucking well. Government contracts.
Fundamentally, you won't find a better pure AI play than Palantir.
Solid.
Like I can make the argument they're the only profitable AI play in the market right now, private and public. Pure AI, only profitable one. Like all the LLMs will always be commodities, and honestly, the profit won't be for years to come. Like
But
maybe,
they're
but
not
it's a
a
commodity.
business
It's not even.
yet.
It's not the same. AI is the only. I mean, Palantir is the only pure AI profitable play, and 2 quarters. Like if you guys know about the AIP, it's the AI platform that's just like going crazy demand. Like past 2 quarters, absurd demand for the AIP. Like it resulted in last quarterly earnings was like 70% jump in their commercial customer count. That was like always the one metric that I tracked on like, all right, is this AI platform actually real? Like we need to track the commercial customers in order to do so because we know the government loves using them. That should give you the validity you need to see if this is a real AI play. It is. The government uses them and needs them. The commercial element was like always a wild card. It's like the nobody really understands the product. Like the such a black box, and the commercial, like, will they ever use it? Because it's essentially the operating system for enterprises if they do. And like, do they want to give up that control? Blah, blah, blah. We saw that's clearly not the case. Inflection point for AIP was this earnings. I said, perfect. Yeah. Right here was the first earnings that we saw. All right, AIP is real. Big gap up. Consolidation. Okay, because we don't know if it's how real it is. Just 1 quarter. Is this a one-off? No.
Look at
it's
that
not a
buyer
one-off.
base, though, dude. Come
It's an
on.
inflection. So I was like, oh shit, same action, like big gap up. It's just consolidating. Big gap up, consolidating. Their earnings, I'm telling you, this next quarterly earnings going to be above 30, in my opinion. I think the AIP is going to gain momentum 3 straight in a row. It's going to become an absolute real play. They have the fundamental the Rule of 40 score I love. I just did a post today on it. Let me put it up. They are absolutely elites on the Rule of 40 score.
Yeah, I've been killing myself to not exercise this. I've got the 15 calls. I mean, they're up 700% now. But I'm sitting on 5 of those bad boys that I've been just waiting for a moment like that to probably exercise.
I mean, this is the only I own. This is all the names I own. This is the only stock I actually think has a chance of becoming a $1 trillion company because they truly can become the OS system for like all these enterprises. So like they have that spitting chance. Like it's impossible to predict a $50 billion company becoming a $1 trillion company. It's such a unicorn level. I'm just saying, I do think they have that chance. And if you look at the Rule of 40 score, like I said, anything above 40 is elites. Anything 50 to 59 is Titan level, in my opinion. Anything 60 above, unicorn. Everyone knows CrowdStrike. I've been pounding the table for CrowdStrike for over a year. They're going to be the go-to all-in-one cybersecurity platform. They belong in the unicorn status. Guess who's number 2? Palantir. Palantir is just like the fundamentals are already there. They saw an inflection point past 2 quarters. If that continues, they're going to gain a bigger multiple that's going to be deserving. Just their premium valuation will just keep increasing because clearly only pure AI play in the market, and their AIP is an inflection point. Who knows the ceiling on that? Absolutely nobody knows. So like the potential is endless. So I do think, going back to this, is my why they in the Titan status, the elites Rule of 40. But if you go on the charts, like let's see. I don't love they broke the 50 day, but at the end of the day,
earning expectations too. That's a whole nother element. It's like earnings expectations for Q1 of 24. As long as they beat, I think, as long as they could beat on either of the next 2 earnings, boom, done, gone. Because even on the miss, right? Even on the miss, look what happens. Not to say that positive earnings reflects positively in the market always, but I do think that that's enough confidence that people will say, you know what? We believe. They become believers and they join the party. So also, I guess like
the S&P conclusion
332 here. So what would you say, like, of the 3 names that are worth a watch at the very least, given a 1 year horizon? What are they?
Palantir is for sure one.
Okay.
I also forgot to mention any day now the S&P inclusion for Palantir can happen any day. They qualify.
Yeah.
They've gap profitable. Next one,
And that's
I
a
think
big base to be built at current market price.
100%. My favorite small cap play is Transmedics. I called it out last week. Told you guys it protected this 200-day like a fucking champ, and they have an absolute every element you want in a mini monster. Like I found Celsius in the teens. My average cost basis in Celsius is like $20. This is my next Celsius. Like I'm so fucking confident in this name. This is gonna be worth $10 billion in the next couple of years. Shockwave Medical just got acquired by J&J recently. This is like the next. I think a lot of investors are gonna flock to this name because that's the next Shockwave fundamental profile. And if you guys don't know about this company, research it. Organ transplant system, like they're creating their. I love investing in companies that create their own markets because their products are so revolutionary. That's
Right.
Transmedics. Growing top line triple digits, profitability right around the corner, monster. So they protected this 200-day like a champ. Look at this accumulation. This is standard buying. Like this is just like people scooping up shares every single day. This is gonna break out. Look at this. It's a gorgeous chart. It's gonna break out. So that's my second favorite play. Besides that, let's go to my who performed the best. I mean, first off,
Yeah.
at
Easy
this
peasy.
valuation, it's a freaking no-brainer. Snowflake. Oh my god! Like, sure, this chart looks ugly. There's the perfect example of a disconnect from a stock price and business execution. Everything that happened with Snowflake, the last earnings report, is just kitchen sink quarter for new CEO. And typically, in my experience, those kind of quarters are great entry points. And anecdotal evidence and multiple different industries I've worked in the corporate strategy side, Snowflake has been part of that. Each different industry job I've had is a necessary element where the C-suite is like, how can we leverage this data more for actual decision making? Snowflake,
Yeah.
usage-based model, it's going to explode. They already have like a third of the Fortune 500 clients. They own the like. Remember Austin and I said earlier in the call, like Austin specifically, like data, first user data, like using data in the AI function. That's the key because once you have that, you have a lot of pivot points and like luxury of whatever you want to do. If I just said a third of the Fortune 500 data is on Snowflake's ecosystem, they're the biggest beneficiaries on what kind of AI pivot they can use. So sure, give me that fire sale in the 150s. I double my position in that stock. It's already number 2 position for me before this gap down. I doubled it in the 160s, 170s, 150s. So great fire sale. My favorite 3 options are Palantir, Snowflake, and Transmedics. I think they're going to be freaking monster companies in the next decade, but we'll see. It's earnings season next week. So that's the beauty of earnings season. Like we're going to get more evidence, more proof of like my thesis is it being validated or am I just a complete luck and I'm just blinded by emotions or anecdotal evidence? What may be? I don't think I am, but we'll see.
I agree. So thanks everybody for coming in. Make sure you join the link at the bottom. Go follow my man here on Twitter. He's got a link in his bio. You need to get in there if you want the deep dive on all these. That's where you get it, on where the camera is. We'll be back at the same time next week on Friday. I love y'all. Stay blessed now.
Peace.
End it.